Apple closes trading today at 174.79. Since the beginning of 2019, Apple has risen to more than $180 a share in less than 3 years. That's almost a 400% increase in just 3 years. But since has corrected to more than 30% a year later. From there, it has reached an all-time high again, above 195. But since has corrected again and is now trading around $175 a share. So is Apple currently a buy? The iPhone 15 series was introduced on September 12th and it is available on September 22nd. Apple mentioned there's a lot of upgrade to the 15. For example, 26-hour video playback on the iPhone 15 Plus, as well as a 48 megapixel camera. But the real question we really want to know is, will this help Apple make more money this year? Looking at Apple annual income statement, we can see that Apple has a revenue of $394 billion in the year 2022 versus $366 billion in 2021 and $275 billion in 2020. In the last 3 years, the demand for Apple products continued to grow, especially in the service area, thus contributing to an annual increase in revenue from year to year. With a big increase in their revenue, we can see that Apple profit also make a big jump. Look at their operating income. In the year 2022, Apple has an operating income of $119 billion versus only $66 billion 2 years before. Now moving on to the quarterly report, we can see that in the latest quarter, Apple has a revenue of $81.8 billion versus $83 billion the year before. And in the last quarter, Apple has $94.8 billion versus $97.3 billion the year before. With less demand for Apple products this year and more competition, we have to wonder, when will Apple be able to continue growing again? 2 weeks ago, the Wall Street Journal reported that China will not allow the government official to use the iPhone at work. This may reduce the total amount of iPhones sold in China. Adding to the burden, some consumers in the US will have to start making payments to the student loan starting in October. Faced with these challenges, it may be tough for Apple to continue growing every year. Compared to other tech companies, Apple currently has the highest market cap at $2.7 trillion, which is higher than Microsoft, Google, and Amazon. Apple is also the biggest company in the world. But to see if we should buy Apple or not, we have to look at its forward earning and revenue. For the year 2023, it is estimated to have a revenue of $383 billion, which is less than 2022, where they have $394 billion. Their non-GAAP earnings for 2023 is estimated to be at 6.07 cents a share, which will give them a price-earning ratio of 28.8, which is higher than Microsoft, Google, and Meta. This is rather expensive for a company that's not growing. Please read the following disclaimer before continuing. For the year 2023, even though Apple did not grow in revenue, the stock actually grew over 50% to an all-time high before dropping. At a forward price-to-earning ratio of over 28, I would not be recommending buying at the current level. Instead, possibly waiting for it to drop below the 50% retracement at around 160 before taking on the risk. But for me personally, I would even wait for Apple to drop further and further down before even thinking about buying it, unless there's a positive outlook on it. Of course, Apple can always go much higher and higher due to positive sentiment, but at the current valuation, it's not worth the risk for me. Thank you for watching, and make sure to subscribe for more videos. I'll see you guys next time.